Good morning, it's Jeff Christian from CPM, 23rd of April, about 10:30, I guess, in the morning. I wanted to talk to you about a variety of things. Basically, what I'm going to be doing is responding to some of the more legitimate questions and comments from past recent videos. Before I do that, I thought I should update a little bit on silver. There continues to be a lot of misinformation and just bad information. It isn't that people are necessarily trying to deceive you. They just don't know what they're talking about in the silver market. And I thought I'd do a little bit of update here. First off, we have the Comex Roll. May Comex active contract. The first delivery date is a week from now. You have a lot of open interest. I think the last number I saw was about 378 million ounces of May open interest. That will be bought back and rolled forward into July between now and next Friday, the vast majority of it. And that could have the effect of pushing the silver price up. It's something that's happened always. It's something that I won't bother you with the details. If people really want to know, we can explain it to you at some other point. But it's something that exists in the market. Now, you also have the Wall Street bets, Wall Street silver people who say that you're going to try to squeeze the May contract. And they just don't understand what they're talking about. And it's terrible. As I explained to somebody the other day, I could have a motorcycle accident and suffer brain damage and know more about silver than they do. It's just, they're really off base. But they say that they're trying to squeeze the May contract. And what we've seen actually in the last 48 hours is kind of interesting. We had seen the roll in the silver contract out of May into July. And yesterday, you actually had about 9 million ounce increase in the May contract. What that represents, almost 100% sure, is hedge funds going long in the expectation that the price could rise because A, you've got the roll going on, and B, you've got the Wall Street bets people in there diddling around in the market. And they will think that they're having an effect on the market, but they are. They're having the effect of driving institutional investors to go long in the expectation that the price is going to rise. I've shown you this chart before, and I'll show you again. These are two different times. The top part is March, April, and May in 2011. As the silver price went from about $32 an ounce at the beginning of March, actually throughout all of March, it was about $32, $33 an ounce. It was less than $34 an ounce. And then it rose to $50 an ounce during the roll in April of 2011 of the May futures contract into July. And I've talked about this in the past. You actually had ETF investors selling silver during April. You had very low coin demand, partly because the price had risen so sharply. A lot of coin buyers said, I'm just going to wait until the price comes down. The big amount of buying that you had was this orange line, which was the May open interest, which was being bought back and being rolled into the July, the gray line. The gray line was the July contract, and you could see as people were buying back their May contracts, they were selling July. They were rolling forward. It's what happens in a commodity market where you have commercials hedging their physical positions. And it sometimes, not always, but sometimes pushes the price up. And all of the buying that you saw back then in April of 2011 was these futures shorts buying their shorts back and rolling them forward. And you went from, you can see here, late March, 400 million ounces, almost 400 million ounces, to late April when the May contract was deliverable, and it went down to almost zero. And the price of silver fell back as a result of the roll being behind the market. That's what happened in 2011, pushing the price up. And that's what happened actually in January for the February contract, which was the February contract, I'm sorry, in February for the March contract. And once the March contract was over, it was over. So you've seen that a couple times. You've seen it a lot of times. I've seen it ever since the early 1980s. This is nothing new, and it's going on, and it's happening now in the May 2021 contract. Meanwhile, the Wall Street bets people just continue to tilt at windmills. It's very funny. My one son, both of my sons are incredibly intelligent, much more intelligent than, say, the Wall Street bets people. Much more knowledgeable about financial markets and futures and options than they are. And it was very funny because maybe 10, 15 years ago, one of them stumbled across GATA, and he was asking me at dinner. He said, I was reading these GATA people online, and I noticed that they had Don Quixote as their I don't know what you would call it, their meme. They used Don Quixote. Do they realize that he was insane? The man of La Mancha, Don Quixote, tilted at windmills that he, in his delusions, thought were conquistadors, were knights in shining armor, tilting at windmills, thinking that a windmill is a large bank. Anyway, that's neither here nor there. It's an aside to the market. It's a distraction to the market, and it's a really funny one. Let's talk about record levels of London and New York holdings. I mentioned this in a couple of weeks ago. Here's some charts just showing you. You can see London vaults shot up very sharply. Some of that's investment demand, some of that's ETFs, some of that is silver being sold because the price was higher. And you can see that Comex, it doesn't really show up here. Comex inventories are off about 30 million ounces, but they're so high compared to the history of 100 and 120 million ounces that the decline as they drain the swamp hardly shows up. Now, let's get to some real stuff. Somebody asked me, how could I think that silver could shoot to $28 or $30 or $32 in late April, while I thought the gold price would move sideways? And they said, if gold and silver move in concert, how can that be? Well, first off, there are price divergences all the time. On a long-term basis, if you just look at monthly averages, look, the ratio has ranged from 16 to 1, the day that the Hunts went bust in early 1980, to 100 to 1 in 1992, when investors turned into net sellers in 1990, and you had a lot of people, to about 117 to 1 late last year, early this year. It's come down. So there's great variability there. But even within that, there's context. We did a report last year. I think we redid it earlier this year. I think we talked about it in the March 4th silver fact and fantasy thing. The fact of the matter is that gold prices in bull markets tend to start rising before silver prices, and then silver prices tend to play catch up and outperform in the late stages of a bull market. I'm not saying that we're in the late stages of the bull market. I think we're actually in the early stages of a really big bull market that's going to last for several years. But one of the things that you've seen right now is silver has been playing catch up over the last 6 months or so with gold, and that ratio has come down. People will look at an average, they'll look at a range. It's all just math. There's no science behind it. There's no geology. There's no finance. There's no economic or physical reason for gold silver ratio to be what it is. And you can say, oh, well, the gold silver ratio, it was 70 to 1. That's the average. Well, you can see the average has been touched probably about a dozen times in the last 50 years. And in between that, it's gone from 100 to 1 to 16 to 1. So you can have major divergences, and you can have short-term divergences, and you can have long-term divergences in that gold silver ratio. And yes, the prices do broadly move together, higher and lower, but there's a lot of other things that happen in between. Last week, we showed you the chart on the left, which was the premium that Fidelitrade is charging for its 1,000-ounce bars. And we showed you that because we wanted to show you that, there's a couple things about it. First off, the big jump was in March of 2020, and it related to the lockdown, the race to cash. investor selling of silver and the pandemic. It has come back, it came back down to about 1.5% after that, and it has risen earlier this year back up to about 2.3%. And some of that is investment demand, and some of it may be the Wall Street bet boys. But the important thing is it's not 10%, it's not 14%. The people who are playing the Wall Street bets people, the people who are, as somebody said on the internet, the sharks that are manipulating the unwashed, not my words. The sharks are saying, no, there's no 1,000-ounce bars. We have some, but we have to charge you 14%. And the Wall Street bets guys, some of them are starting to wake up to the fact that they're being played here. And they're saying, wow, why am I paying that guy 14% when I can go over there and get the same 1,000-ounce bar for 2.5%? And yes, the premium is much higher than it has been for most of the past decade. But the reality is that it's still very low compared to what the sharks will sell you your silver for. Now, one of the questions following up that was, well, what are the premia for 1-ounce silver eagles and 100-ounce bars? That's on the right side. This is from our early April precious metals advisory. So it's only updated through April 1st. My apologies. But you can sort of see here the premia, and you can compare these to what your friendly neighborhood shark is charging you. So those are the premiums. And then the last question was, what about osmium? Maybe I should buy osmium. These are the osmium prices since 1972. Funny thing about osmium is that if you just buy some and you put it in your garage, it gives off a poisonous osmium tetroxide gas, which will kill you and your family. So no, don't invest in osmium. Second thing is, don't invest in osmium based on capital appreciation expectations, because you can see the price has not really changed since 1989, 1990. And the third thing is, osmium is a roach motel for an investor. Anybody can buy osmium. When it comes time to sell it, you're going to have to sell it back to the guy you bought it from. He remembers that you bought it from him. And when he sees you calling him, he knows that that's because you want to sell it. And that spread is going to be really big. So the price may be $400, but the price that you're going to get is not going to be $400. Because quite frankly, if he's a dealer, he might be sitting on the osmium inventory for a long, long time. This chart is from our July 2020 Platinum Group Metals Yearbook, $160, and it's available at CPM Group's website. And we will be coming out with an update of it in July of 2021. Again, we have started coming up with products for retail investors, people who don't want to spend $3,800 for a subscription to the Precious Metals Advisory. They can buy a single issue and see what it's like for a few $100s. They can buy our yearbooks. They can buy our trade recommendations for silver. They can sign up to get the gold trade recommendations for free. It's really, a variety of things. They can buy some consulting time. You can also go to our website and find a lot of free reads. We are moving forward with the Challenger Assumptions webinars. Stay tuned for that. And our silver yearbook will be released on May 11th. I showed you some data a few weeks ago, maybe in early April, about our estimates of cumulative production and their distribution. It's interesting because I've seen some offtakes of that, offshoots of that in other people's presentations since we came out with that number. And these are numbers that we've been updating annually since the 1970s, but it is out there. We have gone through our study of silver inventories and historic silver inventories going really back to the 1940s when the US Treasury had 3.3 billion ounces of silver in 1942 in bullion form, and the 1 billion plus that they lent to other countries during World War II during the Silver Lend-Lease Act program to help those countries' economies survive the war. And we've gone through that. It's all discussed in a special section of the review at the front of the silver yearbook, and that'll be coming out on May 11th. You can pre-order it at our web site, and you can buy the Gold Yearbook, which came out in March. That's all I have for this week. Don't buy osmium. Stay clean, stay warm, keep your hands clean, be nice to yourself, be nice to other people.